Good morning, traders. This is Tony D from easyMarkets in Sydney. NFP days here, first NFP of the year. We are seeing the US dollar going to this event though extremely weak. We had the preview number, the ADP, come out last night. Look, a very solid number, and the markets bought US dollar for 15 minutes, 30 minutes, and that was about it. And then you see some extreme reversals again. Euro back at 2017 highs, threatening to break out. Above these levels, you're going to have to go back all the way 2014, see where we can get to. And 125 is being bandied about by many bank analysts, many traders out there looking at these numbers. I mean, it may be a little bit too soon to get so ultra bearish on the US dollar, given data is so strong and the Fed is still raising rates. But there definitely seems to be a lot of appetite to sell the US dollar at the moment. Whether this is going to be the theme for the whole of the first quarter or just some sort of December, early January theme, you definitely don't want to be fighting it just yet, though. The price action is extremely strong. In terms of the levels you want to be watching here on gold, now that we've broken back above 1320, it does open up the door 1350 quite quickly. Same here with Aussie dollar. Aussie dollar's broken 78.50 as well, targeting now 80 cents as the next main resistance. It's also well supported on the back of commodity prices, copper and oil doing extremely well. So broadly across the whole board, every pair, with the exception, notable exception of dollar yen, I suppose, which is being supported by record US stocks. Another day, another record overnight. Dow Jones hitting the psychological level of 25,000. In terms of the impact on the FX markets, though, there isn't too much correlation anymore between risk and US stock markets and any of the pairs. With the, maybe dollar yen a little bit, but really dollar yen has been going up when stocks have been going down, and there's not that much of a strong correlation. So dollar yen seems to be more playing its own tune in a very tight range, 112 to 114 for the last few months, and it's a little hard to see the breakout there. In terms of Fed expectations, the market's still arguing about whether we're going to be raising 2 or 3 times, and probably that's going to be the difference between the dollar yen going to 120 or to 110. In terms of the biggest moving pair overnight, it was the Kiwi dollar. So the Kiwi has been suffering for the past few months in anticipation, well, on the back of the new Labour government, in anticipation they're going to be interfering with RBNZ. We haven't seen that, and we've seen those fears subside, playing catch up and extending, actually surging here. So we've gone from profit taking and short squeeze to pretty much a new trend here, which is an uptrend, and Kiwi's notable for doing this. It's one of those pairs which definitely overshoots. So the Kiwi dollar is the strongest. Now this has led to a key day reversal in the Aussie Kiwi. So if we were talking about Aussie Kiwi yesterday, we're talking about the break above 110, key level in the Aussie, and then we've smashed back below it. So it's got to be very careful when trading this pair. Seems to be orbiting around the 110 level now, rather than using it as a pivot point for trading in those previous ranges, which was 110 to 112 or between 110 and 108.50. Definitely seems to just want to spend its time at the 110 level itself. If you have any questions about why the US dollar is weak, we do have some longer explanations I can give you. You can come through to the dealing room on the numbers below, or if you are not a member of the easyMarkets dealing room, please click on the Active Traders group link below, and you can get some of the information, some of the benefits for joining us.